Well, we are now in conversation with the CEO of the company of Acme Solar, Nikhil Dhingra. And of course, to join me in this conversation is also my colleague Mihika, who will, of course, help us and guide us through this. But Nikhil, thanks for taking the time out. So, your assessment of the quarter gone by, we do understand that it's essentially been because of seasonality, muted demand, monsoons playing out. But
I'll just explain. Yeah,
please go for it. Yes, please go ahead.
yeah. So basically, the quarter this quarter is basically you have to adjust for the assets we have sold. As you would appreciate, prior to listing, we had sold quite a few assets. So we had sold close to 360 megawatts in the H2 of financial year 2024. So you have to compare the revenue on a like-to-like basis with the assets which were operational last year with the assets which are operational this year. So 168 odd crores of revenue came from the assets which were sold in the H2 of financial year 2024. So adjusted for those assets, because those assets you have sold and you have realized the gains from it. So adjusted for those assets, our revenue and EBITDA both are up by 5 to 7%. And of course, the seasonality bit only plays out from first quarter to second quarter. On a year basis for all these assets, we have a revenue jump, as I explained. There is a 5 to 7% jump, which we have explained. Because the assets, you have to understand, have to be compared the same, because we work in a 25-year PPA industry. All of our assets are selling power on a long-term basis. So there is not much change on a year basis other than marginal increase or decrease. Seasonality only plays out from Q1 to Q2. It does not play out from a year basis. So if you adjust for that, which we've explained in our investor presentation also and in the press release also, there is an increase in the revenue because we have, you can say, around 12 to 15 SPVs which are producing those revenues. So all those SPV revenue, the consolidated basis, if you see, there is an increase in both the revenue and EBITDA.
Got it, Mr. Dhingra. So, you mentioned the asset monetization that led to a high base initially. Do we expect the same kind of impact in the next 2 quarters, and how do you expect H2 to shape up for the company?
Yes. So there is no asset monetization now because historically we have done asset monetization. We have recently raised 2,400 crores of primary capital. So we are, in terms of the equity raise, we are done for a fair bit of time. So we don't need to monetize any more assets. So you will not see any of these asset monetizations going forward. Typically H1 and H2, H2 is a slightly higher than H1 because there is no monsoon, which is the quarter two. So on a let's say conservative basis, it will be at least equal to H1, and of course it can be higher slightly as well.
Got it, Mr. Dhingra. Let's talk about capacity. 4,180 megawatts of capacity under construction. Could you maybe explain the execution timeline? How much of capacity will be commissioned in FY25 and FY26?
So we had a very significant addition to the capacity in October, which is not in the Q2, but of course in Q3 we have added 4 plants into our operational mix, which is 300 into 4 megawatts. So currently they are doing a revenue of around 1.45 crore per day, and of course they will increase from here as we commission the whole plant in this quarter only. So that has taken our capacity from 1,300 odd megawatts to 2,500 odd megawatts operational. And as we move forward in the next quarter or so, we will do another 450 megawatt of solar, and we have 150 megawatt of wind, which is being done in 2 phases of 50 megawatt and 100 megawatt. So you can see on a DC basis, 600 megawatt of projects are coming up around FY25 and maybe 1 quarter around that. So that's a near-term addition. In terms of the next 2 years, the overall, including this 600, we have around 4,200 megawatt of capacity, which will come up in the till FY27. So that is where we are putting our efforts to acquire land. We have the connectivity for all of that capacity. So as you know, the execution time period is around 2 years. So we are trying our best to see wherever the connectivity is in place in the next financial year, we make that live next year. And of course, where the connectivity is coming online in FY26 or FY27, we do it in that timeline. So 4120 megawatt of capacity, which we have to execute in the timelines I mentioned.
Got it. And revenue generations of the company do rely on PPAs. Now, in consideration with the under construction projects, how much of the capacity has been tied up with PPA contracts, and how are the rates? What's your outlook on that? Are you happy with the kind of tariffs that have been received?
Yes, yes. So in terms of the tariffs which have been received in last year and a half or so, we are happy. And of course, tariffs are subject to your own participation in bids because, as you know, it's a competitive auction. So you are free to let go of projects where you don't like tariffs. And the good thing is the bid program is quite huge in size. So there is participation. You can temper your participation if the tariffs are not good. In terms of the nature of the projects we have received, which are primarily firm and dispatchable renewable energy projects, which is a peak power project, where the tariffs are in the range of 4.3 to 4.7 rupees. Of course, these are complicated projects which require a mix of wind, solar, and battery. But the tariffs have been good. And of course, in the solar, the tariffs are in the range of 2.5 or 2.4 to 2.5, which is again a tariff which gives you a mid-teen return. So tariff-wise, we have a good portfolio in terms of the 4120 megawatt. So in terms of the upcoming bids and upcoming participation, given our capacity, we will look for the projects where we can have the maximum possible returns, and we have sufficient pipeline. So we will accordingly temper depending on the returns on offer, and basically returns on our offer are function of the tariff and the capex. Because as you know, these are long-term projects, so you have to only look at that. And we have an integrated business model in terms of the having EPC in-house. So we try and it helps us control time and cost of the project, because this business is purely about executing the projects on time.
Yeah. You speak about capex. Debt has taken a 16% uptake on a quarter-on-quarter basis. And so could you maybe give us some details on what the FY25 capex is and how much could we see debt increase? I know you have refinancing, strategies in play, but how does debt go from here, and, what is the strategy here?
Sure. No, it's a very important element of our whole capex plan, that how do we plan. So in terms of the operational debt to EBITDA, we try and keep it between 5 and 5.5. We have around 5.5 odd thousand crores of debt for the operational assets, and our EBITDA from these assets as of now is around 1100 crores. So around 5 right now, but you can say around 5 to 5.5 is the band. And these debt we take are for 20 years, typically 18 to 20 years, because the PPA tenure, as we discussed, is around 25 years. So the long-term debt, right? And of course, the debt to EBITDA, which we are comfortable with historically and even now, is around 5 to 5.5 on an operational debt to EBITDA basis. As I was saying, in this quarter and last 6 months, we have done a CWIP, capital work in progress, of around 2,500-3,000 odd crores. So that CWIP will convert into gross block as we commission the plant. We have been selling power, but the commissioning is expected in, let's say, next 15-20 days. So that's a large plant. A CWIP of around 3,000 crores will convert into gross block, and EBITDA will stop. EBITDA is already coming up, but it will be starting coming up post commissioning. On a 1.5 crore will get, let's say, increased to around 2 crore or so in terms of revenue. So large bit of EBITDA will come up for the CWIP we have already done in this quarter and in the next quarter. So all this debt you have seen increase is for these financing the CWIP, and as this asset gets operationalized, you will see the ratio being maintained on the operational debt, operational EBITDA to the debt, which is around 5 to 5.5 times.
A very, very quick question. Is it that even in your business, there is a little bit of seasonality when it comes to awarding of your projects? And by that, does it mean that the second half, the awarding activity increases? Can you just shed some light here as well?
Yes. See, in terms of the bidding, the government did around 60-70 gigawatts, 65-70 gigawatts, if you look at the REIAs and the state combined. So till now, government has done close to 35-40 gigawatt of bidding. So let's say in the remaining 4-5 months, it could go up, like you rightly said. And of course, the other thing which can get expedited is the PPA signing, because as you know, in our business, the PPA signing is very important event. So the states also plan accordingly. H2 can be better in terms of the PPA signing. Traditionally, because the financial plans get revalidated, and the executions are more prone. So we can see the bid calendar is fairly stable throughout the year, but the PPA signing we expect to pick up in the H2.
Okay, well, point taken. Nikhil, on that note, thank you for joining us and taking us through the quarter gone by, as well as what we can expect, and also giving us those clarifications with respect to earnings. Thank you so much for joining in.